Canada's inflation rate tumbles to 3.4%, says all of the articles. What is next for real estate? What is next for the economy? What is next for everybody? Is this the end, or is this finally the beginning of inflation going away? I'm going to go through some articles here. Canada's inflation rate tumbled in May as price shocks caused by the Russian-Ukraine war. It's a bunch of horse shit, but whatever. We're gonna go with it. But economists are still expecting a Bank of Canada to raise rates next month, even with this good news. So inflation rate before this was 4.4%, dropped an entire percent just in 1 month, was absolutely crazy. But if you have been following the Fruitful channel here, and especially on my Instagram with the more day-to-day updates, not surprising at all. I've been calling this for a long time. And the reason is we don't need prices to come down on food, gas, and everything else, even though most of them are, which is fantastic. We only need prices to stop going up as fast as they did last year. So it's just the way they calculate CPI. We know it's a giant bunch of shit because prices are getting insane for like real people, the real middle class and lower class. They're just getting squeezed like crazy because their life is literally getting harder. Eggs are more expensive, milk, gas, like all the things that everybody needs to survive. Those things are still super expensive, and all these other things that aren't really as important, but they weigh heavily in the CPI data, those are coming down, or at least not going up as fast as last year. And like I said as well across all my channels, in these next few months, we're going up against when inflation was its highest last year, which is the way they calculate CPI. So they're comparing this month to this time last year. So of course, these numbers are gonna look amazing. And all we're doing as savvy investors, savvy real estate investors, and especially stock investors, because it's more day to day, we're just playing off of this data. I mean, every investor with a brain, any smart person who has the basic knowledge of economics knows inflation really isn't getting that much better, but it's looking better from this time last year. So let's keep going in the article here. We got it. This is the lowest it's been since June 2021, so all good news. However, the long-awaited decline in food inflation has yet to come through in Canada. Grocery prices are up 9% on the annual basis, showing little improvement for April. So this is kind of what we're saying. We're like bananas, cheese, milk, all the things people need to buy. Those things really aren't improving in price. It's all of the other things. And what we're really starting to see is that lag effect from the housing sector, which the housing sector in Canada, I believe, makes up about 44%, I believe, of the CPI is housing. And we know prices have come down over this past year, about 10 to 15% across most of Canada, especially in Southern Ontario, some upwards to 20%, although we're already seeing the rebound. Like I've been saying on this channel, prices are up 5, 7, almost 10% from that low. So we're still down about 10%. So all of that decline in real estate is only now starting to reflect in the data, because this data is all fucking backwards looking. So it's just the way they do it. So now we're starting to see the housing prices just roll over in the inflation CPI reports, even though they've already rolled over about 8 months ago, but it's just being shown up in the data now, which is absolutely crazy. You know, the Bank of Canada and governments aren't following live data. I mean, I should take that back. Of course they are. They're not fucking stupid, but it's just the way that this data is produced that it's so backwards looking. So we're only starting to see now prices starting to come down, but it's been like a year. So all that being said, what do you think is going to happen in these next CPI reports with all that lag data from housing starting to appear now? So inflation is going to drop like a rock, just like Kathy Wood has been saying, which I've been a big follower of Kathy Wood because she's been kind of going against the tide. And I really like to pay attention to both sides, but I especially like to hear the side that's being silenced the most or being told you're wrong, shut up. I tend to like that side more in times like these. And she's been saying from the beginning that all of these commodities, all of these prices, like the housing sector, is all going to start rolling over, but it's going to take so much time for that lag data to hit the CPI report, even though we saw it in real time. If you've been following, I've been showing all of her data and showing all the live data I've been showing for the housing market. Being a realtor, I can see all that back-end data, and prices have been rolling over for the past year, but it's only now being reflected in the CPI. So it's all garbage. It's all fake news, basically. But again, we're investors. We don't care about the fake news, really. We're being smarter and more sophisticated. We're going to use the fake news to our advantage. So it goes on to say the decline in overall inflation is likely welcome news for the Bank of Canada, which is gearing up for its next interest rate on July 12th after raising just a quarter point last month. bringing the total to 4.75%. But forecasters believe that the rate hike in July is still on the table because they really want to slam inflation. So the point of this video is really trying to determine whether the Bank of Canada is going to raise rates. Should they? I mean, if you have a brain on, you can probably realize that they probably shouldn't. That's what they shouldn't do. But me being an investor and following the markets for so long, following the Bank of Canada for all these years, I have a good feeling that they're likely still going to raise that interest rate 0.25 in July. And then that is going to be it, which even in this article, they said that's probably what's going to happen. And it's kind of weird that even the mainstream media is kind of calling the Bank of Canada's bluff, which is what we've been doing on this channel for the past year, with them constantly saying we're going to raise rates to oblivion, higher for longer and higher for a lot longer. And we've all been saying bullshit, you're running out of steam. Now the LITE data and this inflation is starting to prove our bullshit government, with 1% drop in inflation in 1 month. That is fucking crazy. And in July's data, this is the month where inflation was the highest last year. So we're going up against that, comparing today to the highest of last year. So honestly, what do you think is going to happen next month? Most likely, we're going to have a 2 handle for inflation reading next month. So basically, we're going to be in the 2s. Certainly by September, we're going to be probably well in the 2s. Who knows? Maybe 2.6, 2.5, 2.4. We're almost at the Fed's target of 2%. Is it safe to say that by November, December, Christmas time of this year, we're going to be at 2%? Most likely, just right at it. So going back to the fundamentals of, is the Bank of Canada going to start reversing rates early next year, which they've been hinting for the longest time, we're probably going to start reversing, early spring of next year. But even though last month they're just no, it's probably going to be September of next year. Bullshit. Inflation is at 3.4%. We're this close to being at acceptable range, and even better, at the Fed's target of 2%. So we can sit here and we can debate back and forth. What's the Fed going to do? What should we do? The real question is, what should we do as sophisticated investors? And that is just keep buying quality real estate in great areas. We know where inflation is going, and it's going down like a fucking rock. We know what the Bank of Canada is gonna have to do, which is lower rates, and probably sooner than they were thinking. And by the way, they're saying we're gonna lower rates in early spring. So let's just say February, March. That's 6-7 months away. Who fucking cares? So basically, now is the time to get good quality deals while there's still fear in the market. There's still confusion. We all know where real estate is going, where inflation is going. So if you're buying properties today and your plan is to hold them for 3, 4, 5 years, ideally, which is the Fruitful method, dude, 5 years from now, this is all going to be a thing in the past. And I'm sure in 5 years from now, there'll be a new war. There'll be a new problem. There'll be a new virus for the government to fucking quote on and be on like it's a fucking Super Bowl. So we know where this is all headed. So who cares what's going on today if you're buying quality real estate and you're holding it? Now, for people like me who are flippers, who are more day to day, this is where you got to be way more savvy and be getting good quality deals way under market value, which is what I teach on this channel all the time. So do I really care? Even as a flipper short term, I don't really like what's going on, that's for sure. I wish it was more of a boring market, which is what I like, but am I going to stop flipping? No, because we're buying deals at such a goddamn huge discount that even if the market does take a little bit of a dip, which I honestly don't see how that's even possible with all of these fundamentals going on, all of these pent up demand with millennial home buyers, builders aren't building, sellers aren't selling. People are still going nuts right now buying properties with bidding wars, even at these high peak interest rates, which we know they're going to roll over in the next 6, 7, 8 months. And there's still all this demand for real estate. So I just don't see how this doomsday 2008 is going to happen. It's just not going to happen, especially in Southern Ontario. It just can't happen. So stick to the fundamentals. Keep your head on a swivel. Keep following the news, of course. But if you stick to the fundamentals of buying quality real estate in great areas that have good population growth, job growth, good rental demand, good demand for buying, who really cares about all this news? Let's just use it. Dude, I'm using all of this news to our advantage when it comes to buying properties from sellers directly who are already motivated. The house is nasty. It's a hoarder house. And then we're buying these at great deals because we're telling the seller straight up like, yo, this house is not going to sell in this market with interest rates at 7%. Like, dude, nobody's going to want this house and put in another 100 grand to make it nice, but I'll buy it right now off your hands for this deep discount, but it'll be the easiest transaction you've ever had. We're buying the best deals we've ever bought ever in my entire career since investing in 2012. We're buying all those deals right now. So dude, I'm loving it up. I hope the Bank of Canada actually holds rates a little longer. I mean, for me, like my ideal scenario is that the bank lowers the rate eventually when it's proper time, to about 4.5%. And that's where rates stay for mortgage rates. So like, don't go back to 3% rates, 2.5%, like 1% variables. Dude, we should never ever have that happen again, because that's what creates this crazy market, and people don't care about the prices they're paying for real estate. Like I always say, all they care about is the monthly payment. Nobody cares about the price tag of real estate. It's can I afford this mortgage every month? Yes, okay, here's the offer with this arbitrary number that means nothing to me. Here you go, Mr. Seller, can I please have your house? Well, that shit happens when we have interest rates way too low. So if we can keep rates, ideally in my perfect world, of 4.5%. It's a nice stable market. It weeds out the people who really shouldn't be buying real estate, but it's also still affordable for people to get a home, which is really, really important as well. So with all that being said, inflation is dropping like a rock. The Fruitful investor's been right all fucking year long. No, I'm just kidding. I've just been following way smarter people than me who are looking at live data. People who are bears right now and just so bearish on everything. 2008 2.0, here it comes. They're just following all the CPI data for the past year. That's lagged data. Now, if oil was still incredibly high, which by the way, oil is lower than pre-pandemic right now. Like, follow the fucking data. Anyway, oil is low, wheat is low, copper, gold, silver, all these metals, titanium, everything is just down to almost pre-pandemic level. Lumber is at pre-pandemic levels. Like, come on, guys. Follow the real data. Get your head out of the sand and follow the fundamentals. Anyway, I'll see you in the next video. And by the way, if you like these news-style impromptu videos, smash the like button, hit the subscribe button, show me some love so I can make more videos. See you in the next video.